What's going on, everybody? Dillon Del Rosso here, co-founder of PeakBot, joined by my co-founder and co-host Ben. We're back for another episode of The Pulse here, all things option selling. Excited to be back. We got a good show for you here today. As always, we'll be taking a look at our watch list for our automated strategies. Specifically, we'll be looking at the wheel watch list. We'll be talking about a couple of our other strategies here, giving you guys some updates on the business, taking a look at portfolios, analyzing some charts, etc. So just for anybody new to the program here, PeakBot, automated options trading platform for retail traders. We make it easy, affordable, and transparent for the everyday person to put a stock trader in your pocket, start trading hands-free. It's the future of trading. We're making it available now. Thank you to our partners here and broker integration with Tradier. These guys have been fantastic to work with, so we're excited to be streaming here on the Tradier Hub, as well as our Twitter and YouTube. That was different, right?
Yeah, you just didn't say the same old. So
yeah, switching it up. Anyway, I know I already mentioned this. This is Ben. Ben's going to get into the nerdy stuff here in just a second, and we'll get going. But as always, of course, not financial advice. We're not financial advisors. If there are questions, please do not hesitate to put your questions in the comments. We also have a phone number on the bottom of the screen here. Text or call us live. Call us right now if you want. You'll come on air, and happy to answer your questions. You can create your PeakBot account, use peakbot.com. We'll get into all that good stuff.
You know,
Ben, I'll hand it to you.
It'd be kind of fun to take a phone call live. I don't know. I don't think we've done that.
I've said that a couple of times,
Yeah.
call us right now. You want us to look at a chart? You want us to set up your account? Whatever. Like,
I feel like
you want to call us.
Radio show host. I listen to the fan sometimes in the morning. I just hear people calling in all the time. And
yeah, and it would have like the nice, telephone, voice kind of thing. It would be good. So anyway, right. I'm going to kick it to you. I'm going to try and see if I can get us live on our Instagram as well. I don't know if I can do that live, but I'm going to try it. Go ahead, Ben. Take it away.
Okay. Sounds good. We are live on YouTube and X and on the Tradier Hub. So our YouTube, our Twitter account, Tradier's YouTube, Tradier Hub. We're live all over the place.
Not Instagram. Can't do it.
Not Instagram. I don't think you can right now.
Got it.
All right. I'm going to pull up the watch list here. And for anybody that knows anything about PeakBot, this is the place to be. You want to be on this watch list, especially on Mondays. Monday's a big trading day. Tuesday is too, but only if you miss Monday. Monday is the main event. This is where everybody gets excited. This is where everybody sets their strategies up for the coming week. Now, there's a bunch of, and Dillon and I actually did a lot of research on this over the weekend. There are so many different websites and educators and these gurus, air quotes, online that are telling you like, hey, come trade with us and you can earn, 200% return by only trading for, 30 minutes a day. Well, one, I'd like to say for PeakBot, you don't even need that much time. You could do this in literally 5 minutes a week. And two, I hate to say it, but we're not going to get you 200% returns. We're not even going to get you 100% returns. We're realistic about trading, and we realize that we want to be more conservative and have these slower growth, reliable strategies. We're shooting for 0.5% to 1% per week, and you can see on this watch list, we've got an estimated return percentage in this column here with the green header. Weekly put premium percent. That's what we're going to be talking about today. And that's really what we should be using to set expectations when trading. We could take this list down a little bit further. We can see that this percentage fluctuates depending on the risk level, which is this column right here. So we've got lower risk, we've got moderate risk, we've got high risk. Then we do have a very high risk, but that makes its way onto a completely different sheet here. We don't really like to touch those. That's usually the bang's not worth the buck there. So anyways, again, we are automating option selling, and specifically for this watch list, we are automating the wheel strategy. For those of you that aren't familiar the wheel strategy starts by selling covered or cash secured puts. In our case, we're actually selling put credit spreads because we want to hedge our downside risk. And then at expiration, if the sold contract expires in the money, we will get assigned those shares. If the sold contract expires out of the money, we just keep moving, nothing happens, and we continue on and do the same thing next week. Important point there. Next week, we are selling weekly expirations. We're looking to collect these premiums on a weekly basis. Dillon's got a great video somewhere out on the internet about this being comparable to rent. Let me collect my rent. I'm going to put my money into this investment. Sure, the value of the investment could go up and down, but I'm going to be collecting rent every week. And that's something that you can do with option selling. So Dillon, was there something that you wanted to share? You're muted. That hasn't happened in too long.
Rookie move, man. Damn. Yeah, I was going to pull my screen up for just a second. If we want to, we don't need to, but you were just explaining the wheel strategy. I had a nice visual diagram of it here. So just for people, to kind of see what's actually happening with the wheel strategy. I'll fly through this super quick because it's going to be a little bit repetitive, but Ben mentioned you can either sell the traditional wheel, right, by starting with a cash secured put. We have it preset to sell spreads, put credit spreads and call credit spreads. So, weekly contracts built to earn premium. If you get assigned shares, we'll start selling calls, whether it's a credit spread or a covered call for you to earn more premium. If you don't get assigned, you continue to sell puts until you do. And then once you're selling calls, you'll sell calls until they get called away. And start back at the top. It's called the wheel for a reason. We're just in rotation. Selling puts until you're assigned, selling calls until they get sold away, starting again at the top. You're earning an extra paycheck every week by collecting this premium. So just figured I'd share that with the audience. And cool. We can get back into it.
Awesome. So how do we decide what we want to trade? Well, the most important part is you should be comfortable with whatever company you're trading. We've seen a lot of people sell cash secured puts strictly based off of the amount of premium they thought they could earn. And then that ticker has a bad week. And then what do you know? Now they own 100 shares or 200 shares or 300 shares of a company they know nothing about. They're not really confident in it. And they're looking at an unrealized loss. They're holding these shares at a price that's less than what they bought them for. And, that causes, that's a recipe for some to freak out a little bit. And, if you do get assigned shares, there's nothing to freak out about. You're still going to be collecting rent. You're still going to be selling premiums every week via covered calls or call credit spreads. So anyways, this watch list curates the most liquid, I'll say 75 to 125 most liquid options chains in the market right now. And we do that because we want to get our orders filled, right? So we're gonna pick out these tickers. I literally just go over to barchart.com, look at high option activity, and then pull down that list. And then I filter it out for whatever tickers have weekly expiring options. And I also filter out stocks that are too highly priced. So anything over like 150 kind of makes its way off of this list. And that's because, if you're coming onto this list, you're going to take a look at this cash needed column. And this is solely for the wheel strategy. If you're trading like Taiwan Semiconductor right here, you're going to need about $14,000 in your account. We realize that not everybody has that in their account. So we wanted to keep the prices more palatable and, better visually, at least for smaller accounts. So like a smaller account might come in and want to trade FCX. We're looking at a potential $23 premium this week, and you only need about $4,900 in your account to actually get this trade placed. And we've got another column in here, max loss. This is important to realize. This is the most money you will ever lose on one of these trades. And that's
on the put contract.
On the put contract. Yeah, we're looking at puts right now, and that's where we start. This is essentially the width of the spread. So the spread here would be a $2 wide spread, and we're estimating that today we're going to sell the 49 strike and we're going to buy the 47 strike. So that creates that $2 spread. The estimated net premium is $23. So the $2 spread here, that's only really going to trigger about 10% of the time. And if we look at the deltas, we can statistically kind of work out the math here. We're selling the 30 delta, which statistically gives us a 70% chance of winning. And we're buying the 10 delta, which means in order for that contract to actually expire in the money, the stock price would have to drop below $47 from wherever it is now. And that statistically, based on the delta, will only happen 10% of the time. So that max loss of $200 rarely happening. The weekly premium, just collecting it, this $23 right here, that's happening 70% of the time. And then, the other 20% of the time, it's likely that you could be assigned those shares, but that's okay because next week we'll just flip that around and start selling covered calls or call credit spreads. So there were a couple of tickers that I wanted to bring up, and I'll share my Tradier account. I wanted to bring up Dillon Energy Corp. And first I want to find it on the list here. I know it's still, here it is, still in the lower risk category. And I wanted to bring it up because Dillon Energy Corp, you need about $5,000 to trade it. You're only making about $16 in premium. That's about a 0.32% return on your capital. Well, that doesn't seem too great. So why are we talking about it? I wanted to bring it up because they reported earnings on May 1st. That was last week. Now, we don't have historicals on this chart. You can't click back and look at last week's, though that seems like maybe a good feature we could build in the future. But if you were to remember what the premium was last week, it was paying up closer to 0.8%, I think, or 0.9%. And that's because it was reporting earnings. So I just wanted to show that there's a big difference between when a company is reporting earnings and then even the week after earnings, right? That volatility is kind of left. Less volatility means less risk equals less reward. And we could see that coming through in the numbers here. So small premium. Now, if you still have Dillon Energy Corp, let's say you were assigned last week, and I'm not sure if those that did trade were assigned or not, but we would then go ahead and sell a call credit spread for you this week at $51. We would sell the 51 strike, and we would buy the 52 strike. You'd collect about $26 in premium. And then if we look at the chart, we would only need Dillon to expire above 50. What was that again? I forget already. $51.
Zoom in a little
on the chart here.
Yeah. Our faces are big over here. They don't care as much about our faces as we do the chart.
So pre-market, it's already trading at $50.87. We would just need the stock price to finish above this $51 level here by the end of the week in order for those shares to get called away, and they would get called away at $51. So, we saw on the PeakBot watch list, Dillon Energy Corp is in a bullish trend. Take a look at the week meter for this technical analysis tool on Tradier. Looks like there's also a buy signal here, signaling a bullish trend. So, all signs are pointing up for Dillon. Of course, do your own due diligence. This is not financial advice. And if you are in that position, good chances that your shares might be called away this week. Now, the next one I wanted to bring up was Marathon, MRO, not Marathon Digital, Marathon Oil.
Marathon Oil Corp.
Marathon Oil. Another ticker that reported earnings last week and actually made its way this week onto the removed watch list. And the removed watch list, for those that don't know, this is our watch list of all the stocks that are either very high risk or are just not paying enough in premiums.
And when we say enough, means under $10 in premium for the weekly contract. It's going to fall on this list.
Right, exactly. And we could see here, Marathon only estimated to earn about $3 in premium. And if you're not trading on Tradier Premium, which means commission-free options trading, then you're probably gonna pay that much in commission fees, anyways. So just not worth it to trade it. They also reported earnings last week on May 1st. So again, last week might have looked like a good play, but this is what happens the following week after earnings. The premium that you could earn might fall. So if you did happen to get assigned those shares, it looks like we'll be selling the 2650 call strike today, earning an estimated $22 in premium. And that's because we're selling the 50 delta. And if we look at ticker MRO, take a look at the 1 month chart. It looks like overall we're in a bearish trend. Take a look at the technical analysis tool for the 1 week. Looks like the technical analysis tool is indicating more buying might be happening. So when you're in a position where you're holding shares, it's up to you if you want to continue to play out the position, sell those calls. I'd like to, in particular, just because we're selling the 50 delta on the call side, which means we're collecting even more premium. So for me, I like collecting more premium, and then I'll just let those shares get called away when they get called away. But Dillon, I know, like you, for example, there's been a few instances where you were assigned shares and you didn't necessarily want to let that position play out, and you went in and you manually sold that position, which is great. You can do that, and you can do that with PeakBot. We're not locking up your funds. We're not locking up your trades. You could go into your account and trade manually anytime you want.
I will say I've learned to try to do that less. This is just me personally, right? When we were looking back at the data, when I was selling these shares that I got assigned on, I was just taking my realized loss, right? Which is fine if I really think my capital can do more somewhere else. We're okay with taking losses. That's going to happen regardless. But the point is, if you're picking quality stocks that you're comfortable owning and stocks that you feel good about in the long run, the idea really here is to just set it and forget it. The more you get involved, the more emotions you get involved here. Look, I made those decisions because I was either fearful of something happening or I was greedy and I wanted something else to happen. Try to keep the emotions out of it. Yes, you can do it. You have the freedom to do so. And if you're a trader here and you want to pick new stocks every week and new contracts, then yeah, you're going to end up doing that. But the investor here, the person playing the long game, likely wants to try to avoid that. Not financial advice. Back to you.
Yeah, no, all good. So those were two that I wanted to cover. I just wanted to demonstrate that, hey, playing earnings, there's really not a lot of benefit for us option sellers, right? Like our earnings are capped, in terms of the amount of premium that we're going to earn. And if we do get assigned shares, I mean, take a look at what we just looked at, right? There's very little upside. There's very little benefit the coming weeks after earnings too. So, in my opinion, it's better just to avoid them altogether. I always tend to avoid them altogether, and I know you do too, Dillon. But
Yeah.
to each his own, you.
As you're saying it though, and maybe you'll pull up a chart for me. I am interested to see a stock that's reporting earnings tomorrow.
What's that?
So it's Coupang, CPNG. So the reason why I'm interested is because one of my Tradier accounts, I only have 3,200 in there. And I'm looking on stocks on the watch list that I can afford in case I'm assigned. It's all the way down, bullish high. Control F, dude. CPNG. Again, you have such a mental block with Control F. It's
I
hilarious.
don't know why. I like finding it. It's like, where's Waldo?
So again, I'm not thinking about this, but again, with 3,200, there's only so many stocks. I'm also looking at Pfizer down here, but that's bearish. I don't really love it. But Coupang paying a 1.12% return this week, which is $24 on the 2150 you need set aside.
It's not bad too. You got $1.50 spread, so your
It's not
max loss is
terrible.
150.
Yeah, you want to pull up the chart quick?
Yeah, but
I want to see what
let's remind you that this is probably only paying this higher premium because of earnings.
I understand that. Yes, remind the audience, and I'm going to keep a close eye on this. But I want to see the technical analysis.
All right. Well, let's look at the chart here. I mean, there was a gap up back at the beginning of April. Interesting, and then Since then, we've been really trending pretty steadily upwards. We had a little pullback. We had a couple pullbacks,
Yeah.
it looks like standard price movement. And it looks like Coupang is on its way up still pre-market, trading at 23.31. So higher than the close on Friday. And if we look at the technical analysis tool for the week, 12 buy signals, only 3 sell, and then
It's
9
dangerous.
neutral.
That's dangerous for me.
It's tempting. I know it's tempting. But
Yeah.
again, our upside is capped.
Yes.
So you can only make $24, even if Coupang crushes earnings and the price goes from, $23 to $30. We're still only collecting that $24.
Yeah. All right. Well, it's good to see. I wanted to take a look at it. Very cool. All right. Good stuff. What else you got?
That's it for me. Unless anybody in the audience wants us to pull up a chart, I will pull up a chart. We can try to find that stock on the watch list. We can determine what the premiums will be this week. Actually, I'm going to pull up my screen again before we pull over to Dillon's account. I just want to show everybody how you can calculate what the premium would be on a stock that you're trading, because we don't have all stocks on the watch list, like Tesla, not on our watch list right now. But if you were to look for Tesla in your brokerage account, and then you'd find this Friday's expiration. So we've got 510 set here. The put side is on the right, the call side is on the left. I'll be looking at puts right now. So I'm going to scroll down to where the color changes here, at least on Tradier. That means that that's near the money. And I'm going to be looking at this delta column. So what we do at PeakBot is we sell the delta that is closest to, but in this case, negative number, so closest to but greater than the negative 0.3 delta. We'll refer to that as the 30 delta. And then we are going to buy the strike that is closest to and greater than the 10 delta, so the negative 0.1 delta. So we'll refer to that as the 10 delta, the 10 delta and the 30 delta. And you'll usually hear us refer to it as less than versus greater than, because we're just not dealing with negatives there. And I see that we had a question come in, and we will answer that in just a second. So anyways, for Tesla, if you were to trade PeakBot's wheel strategy or even our trend spread strategy, you would wind up in this scenario, as the numbers are right now, you'd wind up selling the 175 strike. You'd collect about $200 in premium for doing that. And then you would buy the 162.50 strike. You would give $34 of that premium back. So you would really be earning a net of $166 in premium. And you'd be creating a $12.50 spread for yourself. So that means your max loss there would be $1,250. So that's how you would kind of calculate on your own where you would set your spread based on the 30 and 10 deltas. And yeah, you could do that in any brokerage account. And this data will likely update as soon as the market opens, right? Options are a little weird with pre-market data, and not all orders are in. So things do change when the market does open, which the market's set to open in about 35 minutes here. So keep an eye on that watch list. The watch list is getting updated every hour. So to answer the question in the chat, when is the weekly watch list available? It is actually always available. It is on usepeakbot.com/watch list. We do have a timestamp up here. This is in GMT, so recalculates it Eastern time. Maybe we should talk to our developers about changing that, but we do have a worldwide audience, so the thought was GMT is the central point for everybody.
Eastern is almost, the world knows to revolve around Eastern Standard Time.
Yeah, so maybe we'll change that to Eastern. But yes, you can go to usepeakbot.com/watch list. You can see all of the data here. It gets updated every hour, and then we have a note here that the data rolls into the next week's expiration on Thursday after the market close. So our expiration that we're trading this week is May 10th. So the date on the watch list will be for the May 10th expiration until market close on Thursday. And then we'll start pulling in data for May 17th expiration on the 9th. So that's Thursday, the 9th, after the market close. That's when the watch list gets updated. And then in terms of earnings, that's still a manual process. I'm doing that at some point over the weekend. So that way these blue flags pop up and you could clearly see when companies are reporting earnings.
Yeah, so to clarify for our listeners' question, for the new week, preparing for the new weekly trades, Thursday p.m. is when those are being switched over, as Ben mentioned. Most people looking at the watch list Sunday, into Monday, right, for the most accurate and updated, info and data. Just so everybody knows, our contracts for the wheel strategy and most of our other strategies, our contracts enter between 11 and 12 o'clock Eastern. So the market's opening, we let it settle in for 90 minutes, especially on a Monday, right? So we like the market to settle down right between 11 and 12 o'clock Eastern. Our contracts will enter. So if you want the most up-to-date, if we're speaking technically here, the most up-to-date information is going to be Monday morning. But there's still great data to be had on Sunday.
I personally, I look at the watch list on Sunday and I start to get an idea of what I want to trade. I'll shortlist a couple of tickers on what I want to trade. And then Monday after market opens, I'll take another look at the watch list because it will likely have changed quite a bit. There might be some more companies that pop up that are more interesting than what I've shortlisted for myself. But the most reliable data, of course, is when the market is open because that's when, these contracts are actually being traded versus over the weekend. We're kind of just reliant on if people are adjusting their orders or not. And maybe on some of these less popular tickers, that doesn't happen. And we have to wait till the market actually opens for those prices to kind of catch up to where the stock price is.
Excellent. All right, so let's kick over to my portfolio. We'll take a look at some changes. In fact, maybe some non-changes, but I still want to show everyone how we go about adding and removing stocks. So for those of you who again might be new to the show or newer to PeakBot, this is your account, right? It integrates with your broker. Of course, we're integrated with Tradier as well as a number of other brokers as well. You can find that list on our website. And this is set here for you to pick the stock and let our bots handle the rest, right? Set it and forget it. While you go to work today, the bot's going to enter the trade for you. It's not going to do anything you wouldn't ask it to do. So as you can see over here on the left-hand side, this is my automated portfolio. For the wheel strategy last week, I traded, and I'll zoom in just a little bit. I traded AA and JD, so that's Alcoa Corporation and JD.com. So again, when we do the show weekly, I'd say about half the time I come in and I do make changes. I go against my own belief there. I think those who set it and forget it are the ones who typically do better. But again, if you're going to set aside and create time for yourself to manage your portfolio, not a bad idea to keep an eye on things. But when we take a look at the watch list here, I was taking a look at AA. I still like where it's at, so I'm going to keep it here. And I'll zoom in just a little bit. Alcoa Corp is trading at 36.77. We're bullish in a bullish trend. That's based on the 67-day EMA. We're moderate risk, which is just taking the size of the spread versus the cost of the stock. So only risking $2 on this put contract. Let me just mention, I was not assigned on this last week. I sold a put credit spread with, roughly a 70% chance of having that contract expire worthless and just collecting my premium. That is what happened. So I'm doing the same thing again this week. I like this. I'm earning just about 0.8% on the week, which is $28 on the 35.50 I'll set aside. Here's my strike prices. 33.50 and 35.50. So got about $1.25 worth of breathing room here. So I'm going to keep rocking with AA. Then JD was also right here as well. I'm going to keep this. Also sold the put credit spread last week. did not get assigned, just collected my premium, doing exactly the same thing again this week. And I'm actually going to, after we take a look at some of this data, I'm going to remove JD from my watch list or from my portfolio and just re-add it so anybody watching can see how simple that is to do. It's trading at 32.87, bullish moderate. Love it. Only $1.50 spread, 31.50 in cash to earn 19 bucks, which is a 0.6% return. Here's my strike prices, 31.50 and $30. So again, got about $1.30, $1.40 in breathing room to my strike price. So I like it. When we look at my portfolio, if I wanted to remove this stock, which again, I'm just doing so you guys can see how it works, but all I got to do is click active here. It'll bring you to all of your edit options, pause, play, remove, or even unhedge the position. So I'm going to remove that stock and I'm going to re-add it. Super simple, 3 steps. Can't mess this up. Once you log into your PeakBot account and you connect your broker, this is all you got to do to get trades placed for you. Select your bot. We're going to go with the wheel strategy. Select my stock. I'm going to type in JD and set my budget. How many spreads do I want to sell here? Just one. It'll tell me about how much cash I need available. And if I wanted to turn off the hedge, I have the ability to do so here, but I'm not going to. So I'll hit activate. Sorry, I'm zoomed in now. Agree. This is just a confirmation screen. And this stock is now going to be added back into my automated portfolio, ready to rock and roll. These numbers are eerily similar yet different. So that's it. It's that easy to use PeakBot. I'm sticking with the same strategy for the wheel this week. I'm also trading on trend spread, which we've had in testing now for, I'd say, almost a month. We plan on, I'd say our target date to release this is what, May 20th. That could change.
Yep.
But right now, beta's going well. Just so I had some information last week overall in my portfolio between the trend spread bot and the wheel bot, I made 2.7% on my account for that week. Thrilled with that. Trend spread carried the load there. I actually had a net loss on the wheel, but with trend spread, what we can see is I made $411 at the end of the week. And that was after collecting $740 in premium. Okay, so I had some winners and some losers, if you will. But
Dillon, how much collateral did you have to set aside to make that $411?
For the wheel, I think it was roughly like $6K, $7K, between $6 and $7K.
Okay.
Considering the width of all spreads.
And then trend spread.
Yeah, right. Because I broke up my account. I had in my 14K account, I'm just under, it's almost like 13,999 right now. Pre-market today. It's whatever wasn't traded on the wheel was traded on trend spread last week. So yeah, it was about 6 or 7K in collateral to make the 411 bucks, and collect 740 in premium. But so yeah, and you can see, all these trades that I had placed last week. I'm sticking for the most part. Obviously, my contracts rolled, right? With the trend spread bot, my contracts are rolling week to week. So they were set to expire on May 3rd, last Friday, but around noon on Friday, all of our contracts rolled into this week with the expiration now of May 10th. And it picks up on the trend once again. So,
important to note there too, like when you're looking at our watch list that we put together, you're not actually going to collect the full premium because we are rolling. No. You could get very close to it. And Dillon, I don't know how close some of those were when those actually rolled for you. I know when I was trading my trend spread tickers over the last week, I was actually manually setting some take profit targets around like 60% or so, just to take profit on those positions. So I was just doing quick math on the watch list. Based on the premium that I could have earned, I was only expecting to earn about 60% because I wanted to close those positions out and take in a win there.
Yeah. And that's something that we're, testing out even more, these manual take profits that Ben and our team have been testing. We likely will introduce that into our logic, into our code, so the bot is able to do so automatically for you. So yeah, that's my portfolio. Not making any changes. I'm rolling with my trend spread contracts. I'm sticking with the same thing on the wheel here. And that's it. I'll follow us on Twitter. I'll put in, my trades that are entered today, how much I'm earning in premium, all of that good info will be there. What stocks, etc. So, yeah, I think that's it from my end.
I've got one more exciting announcement.
Hit
And for
us.
anybody that loves the Iron Condor strategy, you're going to want to listen up. So we've been testing out a new automated Iron Condor strategy, and I've been testing it manually for the past, 2 months or so. And it was just last week that I'm trying to find the post on X that I made about it, but it was just last week that we actually were able to automate that strategy. So we got the first automated Iron Condor trades placed for the new Iron Condor strategy. I think it was last Friday, maybe it was last Thursday. Yeah, I've got it on.
We got to start bookmarking. Bookmark anything you think you might reference later on a live show,
Yeah,
so we can find it
yeah, I
easier.
should. Anyways, I don't need to share it, but it's on our Twitter account. Check that out. Earned about $45 in premium on the Iron Condor. We're selling 1 DTEs. We're setting our spread straddling the 25 delta. So talking really quick in technical terms. If you don't understand, reach out. I'm happy to explain it to you. But essentially, we're going to be earning around I'll say between $42 and $48 in premium every single day. And our max loss is only going to be, $100 minus that amount of money. So call it $58 to $52 is going to be our max loss. And the beauty of this strategy is because we're straddling the 25 delta, our probability of profit here is about 72%, 73%, depending on where those sold strikes actually end up. And again, this is statistical. This is math-based strategy that we've got going on. But this strategy will happen every single day. I posted over the weekend my updated results for my personal account, manually trading this strategy over the past 2 months. And like Dillon said, I should have bookmarked this, but my return, I've only traded with $124 worth of capital. So this is not a capital intensive strategy. Use $124 worth of capital, 42 trading days. My win rate was 59%. Actually, I'll pull it up on screen if we could get that on
Yeah, I was
screen.
going to say I have it up here too. If we want to pull it up,
I don't know how to zoom in on that.
just zoom with your fingers. There you go.
Yeah, okay. 42 trading days, win rate of 59.5%, gain and loss, gained $130 over these past 42 days. Now that's not including any trading fees. I'm on Tradier. I pay them $10 a month. I don't have any fees on options. So highly recommended if you're trading a lot of contracts. My return on my capital used 104.9%, called 105%. Insane, incredible. I love it. I love this strategy. Now, of course, got to be careful with this strategy because if you hit a couple of, losing days in a row, which can happen, your account might not look great for a couple of days. But if we think about the statistics and the probability and trading this strategy over a long period of time, you're going to achieve what you believe you would achieve based on the numbers, right? So what I mean by that is, and I'll boil it down to, we use the coin flipping analogy. I just mentioned you might win, you might lose a couple of times in a row. You also might win a couple of times in a row. If you're flipping a coin 5 times, there might be the possibility, there's a possibility that all 5 of those flips are going to be tails when you were guessing heads, right? But if you flip that coin 500 times, you're not thinking, okay, all of these 500 times that flip is going to be tails. You're more likely than not going to see the percent heads and the percent tails be closer to 50-50. And that's what I mean. So when you trade this strategy over and over and over, we're expecting a 72% win rate. Right now, I've got a 59.5% win rate. I expect as I keep trading this strategy over and over and over, this win rate is going to keep increasing. My returns are going to be greater. Again, based on where we're selling these contracts, where we're selling these spreads at. Statistically, we should be closer to like a 72% win rate. So really cool to see this playing out, at least manually in my account. I'm super excited that this is going to be automated, and I'll be automating in my account this week. We might be opening the new Iron Condor strategy free for beta testers, potentially as soon as, not next week, but the week after that. So if anybody's interested in getting in on that beta, let us know. Shoot us a text, say, I want in on the Iron Condor beta. Leave comments. I mean, Dillon and I are pretty tuned into our social accounts. We're always checking our emails, our chat feature on the website. We'll know. If you want in, let us know. We'll get you on the list. And then when this becomes available for our beta test groups, we'll get you in on that, and you'll be able to trade the new Iron Condor strategy for free during testing. So very excited to get that out, get that tested. And for me, again, so I don't have to do this manually every day. Every day I've been right around lunch, I've been getting into a position. Sometimes I miss it. Sometimes I have to do it later in the day. Sometimes I do it earlier. So it'll be nice to have like a consistent, steady flow of this trade happening for me. And this strategy will be available for any tickers that have daily expiring contracts. So SPY, Qs, SPXU, so on, SPX. There'll be a handful of tickers that this strategy will be available for.
People love the cash settled options, on that strategy. In fact, we have a question from our Alyssa going back to the trend spread bot, I believe is what she was referring to. Will the bot have a set percentage amount to close? I know there's a little bit more to that, Ben. Why don't you, at least in theory right now where we're seeing it, what's the strategy there?
So as of right now, the strategy does not have a set percent amount to close. However, we've been testing out what it might look like to find what I'm calling the optimal take profit point. I do have a spreadsheet. I don't think I'm going to share it yet. So maybe let's take that down because there's a lot of numbers here. I'm just kind of looking at it. So what we do here is we, in the spreadsheet, which maybe we'll release at a later day. I actually do want to release this. It's a great tool to have. And this will be free when I kind of clean this up a little bit. But what we can do here is we can plug in the amount of premium that we're expecting. Or even post-trade, we can plug in the amount of premium that we did receive. And then we plug in the spread that we got at. And then we've got percentages to take profit all the way from 100% all the way down to 10%. And that's your take profit level. And then what this table will do is it will calculate out over 1,000 trades what your expected return would be over that 1,000 trades. And then based on whatever take profit percentage yields the highest return over 1,000 trades, that's at least where I'm setting my take profit percentage. And that's where the bot would be setting the take profit percentage. So as an example, I got into a position last week. I earned 9 cents in premium. My spread was only 50 cents. And then I calculated that out over 1,000 trades. It looked like, based on those numbers, and based on us selling the 70 or selling the 30 delta and buying the 10 delta and then working out the probability there, it turns out that the best take profit percentage for that particular setup was a 63% take profit. So when I set my limit sell order, I set it at a 63% gain on the spread. So again, a little technical. The spreadsheet I've got now is a little messy. I know how to read it, but if I gave it to Dillon, forget it.
Yeah. No good.
So I'll work on cleaning that up because I do want to get that out to the public so that way anybody trading trend spread could use this manually for the time being. And then I do think that we're going to bake in these calculations into the algorithm and then make that the default, because ultimately what it's going to do is it's going to increase your win rate. It's going to allow you to lock in your profits, and ideally along with that, like cut losses. So like for the one ticker that I just mentioned, statistically trend spread, you're going to win 70% of the time. However, by taking the 63% take profit, my calculations, I recalculated back to, that's about an 88.7% win rate. So a lot higher for win rate. And then your max loss on that is only going to trigger about 6.3% of the time versus 10% of the time. So you're increasing your win rate, you're decreasing that the times that you take that max loss. And overall, that's just the optimal, based on this calculation, the optimal take profit percentage. So long answer, but yeah. I tend to nerd out on these kind of things. This is where I ramble doing. So
yeah, no, that's for sure. No, I love it though. Seriously, I think people need to know that this is something that we have plans on building into our automation to help the trader in the long run. Another decision off your plate, more data-driven decisions, taking emotions out, giving you the highest percentage of profitability. So fantastic. Great explanation. If people have questions on it, again, message us. There's our phone number on the screen, or will be, has been. And yeah, just let us know. But other than that, I know we're getting close to the opening bell here. So about 13 minutes till market opens. We're going to give people a little bit of time to go adjust anything they might need. Best of luck here today. Thank you again for tuning in. And we'll be back this time next week, same time, same place. And if you want to join us, we're also going live a couple other times throughout the week, likely tomorrow as well as Friday on our own socials. So check us out there. We'll be taking a look at the week in review, some results from last week, etc. So appreciate everybody. Thanks so much. And we'll see you at the peak. Take care.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA SIPC.